is May 13th. And I think everyone here would agree that the markets since for about the last 2 months have been crazy. I think there's only been like 2 or 3 boring days that I can remember since around the end of February. And I don't know about you guys, but the end of February seems like about 7 months ago. So trading right now is like in dog years. 1 month feels like 7. 1 week feels like 7 weeks. 1 day feels like a week. And I don't know. I have to ask my wife if I'm aging like that, but it certainly feels like that. So we've got crazy markets, and they're going to be like this for some time. And the thing here is that if you would have asked anybody on January 15th or even February 15th what their plans were for the rest of the year, they would have told you what they had thought through at that point. And then all of a sudden, literally anything that you had planned for the rest of the year is canceled. We've canceled 5 trips. We've canceled, everything. We've canceled dinner. And it's turned a lot of people's worlds upside down. And that's kind of the new reality. And so nothing really makes sense. Nobody knows what's happening. Government's in charge. They don't know what's going on either. And everybody is trying to do the best they can day by day. So what do we do with this? So during this time that I've been locked down, I've had a lot of time to look at charts. I haven't been traveling. Like I said, we canceled 5 trips. So that's time that I've spent in front of the markets that I would have been on a plane, that I would have been on a beach. But I've had some time to look at the markets in a new way because, frankly, I've been forced to. Like, I've got to stay indoors, or had to stay indoors for a long time. And then during this time, as I was playing around, I did a trade on Amazon, and it resulted in it's my biggest trade of the year and one of my biggest trades, but a $611,000 trade. And as I started looking through this and the reasons why this came together, because a lot of trading is identifying those perfect moments in time, and just got really excited about what came together with this trade, and I want to show you what I found. So first, I don't know how many of you guys have been talking about this documentary called The Last Dance, all right? And even though the markets are crazy right now, this is how trading works, okay? And I didn't even realize this, but my oldest son, James, pointed this out. And when The Last Dance came out, okay, so there's a site called StockX. It's a reseller platform that lets users track historical pricing on sneakers and treat their collections like portfolios. The Chicago Air Jordan Retro, basically in 2015, spiked up 50% over time. But then once the Last Dance came out, they've actually spiked up to $1,300. Okay. And so as we were talking about this is trading in and of itself. In trading, you're buying here in anticipation of future demand so you can sell it at a higher price. Okay. So it could be a pair of Air Jordans. This is actually great if you could buy something for $160 and sell it for $1,310. And in trading, you can do that with options, but a lot of the times we're buying something, say some options at, 10 options at $5 is $500. And then we're happy to sell them out at $800, clearing a $300 profit, right? And so really what it comes down to, this is trading in and of itself. And so what are the tools that we have to set us up for success like that? So what I've tried to do, and if we're going to boil trading down to its essence, it really comes down to this. The squeeze is a tool that anticipates future demand, just as the Jordan documentary, The Last Dance, anticipates demand of higher shoe prices, okay? The 21-period moving average is the fair price to pay today while a squeeze is happening, okay? The squeeze is telling you need to anticipate future demand. The 21 EMA is the fair price to buy, okay? Then boom, it releases energy. There's the demand. And then you sell to the people who are clamoring for it at that moment in time, okay? It's just like the sneakers. All of a sudden, the documentary comes out. Everybody wants those sneakers. They're willing to pay $1,300 for it. And it's the same thing here. Down here, it's like, oh, people are not really paying attention. The squeeze is telling you that it's anticipating future demand. You get in, the demand comes, you flip it out, okay? Here we go. The demand is coming. Let's flip it out. Here we go. It's telling you that it's anticipating future demand. Here's a fair price. We flip it out. And in its essence, that's all trading is. Okay. And what I want to show tonight is that you can do this, of course, on, multiple time frames and different things like that. So let's take a look at this in a little bit more detail. Now, the markets right now are in the top 5 most volatile of the last 100 years. So for those of you that are trading this, congratulations, you are trading through history, okay? You had the great crash of 1929 and black market 1987. I was not trading in any of those times, but those are the 2 most volatile, okay? The third most volatile is happening right now. So first of all, you are trading through history. This is something that's going to be studied for 300 years from now. People are going to be looking back at this and going, what did people do during this time? So that's kind of fascinating. But the other thing to keep in mind is that this ain't a pretty picture in any way, shape, or form. We've got to understand a little bit about the backdrop of what's happening so we can put this into its proper context and then take signals to take advantage of this, okay? Now, at this point, what we're seeing here, and a lot of people are coming out that study this stuff saying like, look, this is not going to be a V-shaped recovery. It's in fact going to be a bad recovery, and we're going to have inflation and potentially an economic depression, all right? 30 million people are out of work, and that's climbing. Purchasing power from consumers is at an all-time low. Now, I don't know about you guys, but because we're sequestered at home, our credit card bills have dropped 80%. We're not buying airplane flights. We're not going out to dinner. There's nothing, if you're just staying home and you're relaxing and you're hanging out with your family, and ideally that you're enjoying it, you don't need to buy a lot of crap, to fill any voids. So it's pretty crazy there. And in addition, I think the biggest meltdown we're going to see is in commercial real estate. Believe it or not, from the 2008 peak, commercial real estate has appreciated an additional 46%, not from the trough afterwards, but from the peak. Okay, so commercial real estate is a bubble. It's done. It's dead. The other thing that's coming up here is that bond ETFs are now, so there's a lot of talk right now, and there was, I think, confusion around this, but the Fed is buying ETFs, okay? They're not buying stock ETFs. So you understand that. They're buying corporate bond ETFs. And why are they doing this? First of all, they announced this back on March 23rd, okay? And at about that time, all those corporate bond ETFs, which were getting slaughtered, bottomed. Okay, they all bottomed with the announcement, and then the purchases started on Tuesday, like yesterday. What are the bond ETFs? LQD, HYG, VCSH, IGSB, and USIG. So LQD, these are high-grade corporate bonds. HYG is high yield, another term, polite term for junk. We got some shorter-term bond funds, et cetera, et cetera. Why is the Fed stepping in and buying these ETFs? To support companies' ongoing ability to refinance for several years, and the goal is to achieve short-term solvency and the ability to fund operations. All right, so keep in mind, the government's going to keep these propped up. They're going to keep them liquid so companies can stay in business. All right, that's one of the ways that they are providing liquidity to this market, that they're trying to support the economy. Now, the other biggest amount of all, I want to point out 2 main things. If we count the rallies during the 2008-2009 recession, there was an 8.5% rally, an 11% rally, a 14% rally, another 9% rally, a 27% rally, a 22% rally, and a 28% rally, okay? And all those rallies happened in between a top and a bottom that ultimately was a 58% decline, okay? Now, no bear market since 1870 has not retested its lows, and many have pushed through them. What that means is that our stock market crashed in March from the highs in February, and since then has rallied back to its 0.618 fib retracement. And in the case of the NASDAQ, has gone through. If we're going to use history as a gauge, since no bear market since 1870 has not retested the lows and many have exceeded through them, I would just use that as a guideline to be open to the idea that the stock market is not going to go up forever. This is a market for traders. This is not a market to buy, hold, and pray. Okay, that will not work in this environment. So we definitely want to be aware of that. The other thing here that you want to be aware of is that the magazine covers, specifically The Economist and all these magazines that are supposed to be very, very smart, Business Week, Bloomberg, they ain't going to help you. If anything, their covers are going to be the exact opposite of what you need to do. At the very week that the markets topped out, the cover of The Economy was The Economist, Big Tech's $2 trillion bull run. And at the very dead lows, the market is closed. Okay. And from here, of course, the market's rallied quite a bit. So they have no idea what's going on. Journalists have no idea what's going on. Economists have never seen before. So the reality of the situation that we're in right now is the uncertainty about the future. Now, right now, we've got a situation where we've got too many people claiming unemployment. So we told them it was safe to go back to work. So the economies are starting to reopen. Nobody has any idea what's going to happen. Is COVID-19 going to break out? Are people going to start to revolt and scream about freedom and civil liberties? Nobody knows what's going to happen. This is a huge experiment. Like I said, we are living through history. Now, a couple people asking about 2008. I gotta first and foremost point out this ain't 2008. Okay, 2008 was a balance sheet recession. This is a pandemic recession. What's the difference? In a balance sheet recession in 2008, we had disappearing borrowers. Okay. And the reason there was disappearing borrowers is because asset prices fell. And this time around, we have disappearing income and disappearing lenders. So what's the difference? In 2008, we had a bursting of the debt finance bubble. Here, we have an emergence of a new disease that doesn't have a vaccine. 2008, we had a collapse in asset prices. Here, we have a collapse in economic activity. It's a big, big difference. 2008, we had an emergence of debt overhang. Here we have disappearing revenue and income. What this means is that it makes it hard to service existing debt. Increased savings and debt repayment. Now we have distressed borrowing and disappearing lenders. Very loose financial conditions, very tight financial conditions. A lot of people don't realize this, but the conditions that are being set up right now are tightening. It's not what they want, but it's what's happening. That's a much longer thing here, but this is not loose financial conditions where it's like, okay, anybody can buy a house. Everything's being tightened, very, very much ratcheted down. And then in 2008, we got higher stock and bond prices. And what this leads to is lower stock and bond prices. This is why the Fed is supporting corporate debt. This is what's happened in 1929. So that's what we have going on here. It's a completely different animal. Okay. And then the idea here, the complacency that things are going to get better, is a complete sham. It's not going to be a V-shaped recovery. And now I'm saying this again with, I'm the first one to say that this is what I think based on what I'm seeing, but I trade the tape. If the market's going up, I'm long. If the market's going down, I'm short. But just looking at what's happening, we saw the 30 million people out of work. Nobody's going to go back to an office, yada, yada, yada. What do we think is going to be happening a year from now? So Larry Fink is the founder of BlackRock. He's been going through all this well. He says, look, you got to expect mass bankruptcies, empty planes, and cautious consumers. There's going to be an increase in the corporate tax rate. Somebody's got to pay for all the money that's coming out. That's going to, crimp profits even more. Financing fears in corporate America currently exceed 2008. 52% of small businesses expected to be done in 6 months. Starting to see that now, okay? Everybody can survive for a couple of months, but then all of a sudden the savings starts running out, right? Anyway, this is not a buy, hold, and pray market. If you can trade and you've got the skills for trading and you've got the tools to work in an environment like this, though, it's fine. So how do we trade this? So usually about once a week or so, I've got my 10-year-old that comes to me and says, Dad, I need to buy $20 worth of Robux. What do I do? All right. I'm like, okay, here's the lines. You make a decision if it comes up to that line to buy it or sell it. And he'll do that and he'll make his money and I give him 10% of his cut and he goes back. And what's been interesting about this and watching him is that he doesn't know what's going on in the world. He doesn't bring any preconceived notions to it. He just looks at the chart. It's actually a great reminder for me to do that as well, because as a history major, I do get fascinated by what's going on, the context of what's happening today, how it's going to look like in history, you know, what happened in 1929, blah, 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 blah. But at the end of the day, if you've got the right tools, you just look at the chart, you pull the trigger, and wham, bam, thank you, ma'am. It's a supply and demand situation. So at the end of the day, trading, you know, for me, essentially my life and trading are all intermingled. And, you know, when we do trips, this is a family trip that we did. This was my oldest son and I. We like to do an annual trip. It got canceled this year with Sir Richard Branson. I have no idea how his businesses are going to fare through this. Going to Africa. This is great. I'm explaining to him what I do for a living. Dylan's like, I've heard this a million times. Hanging out, golfing, stuff like that too. But life these days is adaptability. So on March 7th, which wasn't that long ago, my oldest son and I were at a Lakers-Clippers game. And in fact, it was the last game the Lakers played before the NBA shut down. Less than a month later, I'm wearing a mask, standing in a line 6 feet apart. And then here I am trying to trade while my two youngest kids are running around the house. And so I had to do something to, you know, to quiet them down a little bit. But you got to be adaptable in this kind of environment. Okay. So the deal here is the markets. This is different than 2008, 2009. 2008, 2009 was fun to trade. It was volatile. But the markets here, believe it or not, are different. First, they're moving much faster. Second, the news is the most disconnected from price that I've ever seen. Like, watching the news is worthless at this point. The news and the politicians have never seen this before. They have no clue, zilch, nada. Listening to them can be harmful to your health, and it can be harmful to your wallet. Third, if you aren't trading in multiple time frames, you're trading blind, and I'll show you why in a second. Fourth, if you're trading without patience, okay, without patience, but with conviction, you will get run over. So the idea with this kind of environment, is you've got to be able to save yourself from yourself. The markets are designed specifically to manipulate our minds and get us to chase moves when they're about to end, and to hold on to losing positions too long. In this type of environment, this will be multiplied by a factor of 10, okay? Why is this going to get worse now? Guess what? We've had a record amount of new, fresh meat come into the markets. Robinhood, Q1 2020 has opened up 3 million new accounts. TD Ameritrade, 600,000. Interactive Brokers, TradeStation, all of them have opened up record amount of new accounts, okay? Think about it. New money coming into this market trying to catch the bottom. What's going to happen to them? Their money is going to disappear. 90% of them, their money is going to disappear. Where's it going to go? It's either going to go into the pocket of a hedge fund, or it's going to go into your pocket if you are an ERT, an experienced retail trader. So if you've got the skill set, you can siphon some of that money into your own accounts. It's a really, and this sounds horrible to say it, but it's an unprecedented opportunity, because when you have this many new people with this much money coming into the markets, they just don't understand how it works. How do they start off? Oh, they read a book that you got to place a tight stop. Guess what the algorithms are going to do? They're going to run those stops. This is our money for the taking. Okay, so the keys to mastering the situation. First of all, you got to learn how to use leverage in a way that grows an account safely and quickly, generating outsized returns while avoiding traps. What's a good example of a trap? I don't know if you guys heard about this, but when oil went negative, this poor guy bought 212 futures contracts at 0.01 cent, because he thought, wow, my stop loss is 0. Well, what happened is they went to negative 40. He had a $77,000 account, and it ended up owing the broker $9 million, okay? That cannot happen is if you are long options, okay, or you are doing spreads, or we don't want to do naked options. So the nice thing here is that with options, you can use leverage and you won't get yourself into a situation like this. Now, I'm not knocking futures. I trade futures, but a lot of times people think, ooh, leverage is bad. Leverage isn't bad if you understand what you are doing and you know how to minimize the risk, okay? And then you want to know when to trade normally and conservatively and when to hang on for the big trade. And keep in mind that we want to take advantage of the one thing we have that the large funds don't, okay? They've got more information than us. They've got artificial intelligence. They've got 1,500 traders. We have liquidity. We can right click and get out of anything we want. They would pray to be able to do that. They can't, okay? So they're constantly hedging, okay? Okay, so my number one lesson from my mentor, John, traders just aren't born with the patience gene. And until they develop that, they're fresh meat for more experienced and more patient traders, okay? That's what I mean by all the new accounts coming online. These are not going to be patient traders. If you are patient, the money from impatient traders is going to flow into the accounts of the patient traders. So, all right, so let's dive into some trades. So you guys know I'm a fan of the Squeeze Pro. For those of you that are familiar with it, some of you may not be, but this signal has set up a lot of great trades this year. Now, earlier I talked about the Michael Jordan documentary and anticipating demand, and you can buy those shoes before the documentary and then sell them after the documentary, and you got a great ROI there, return on investment. So same thing here. Here's the dots. The dots are telling us anticipate future demand. Boom. In this case, bought 2,000 shares of QQQ, turned that into $13,000 in about 45 minutes. Here's the NASDAQ futures, anticipating demand. Boom, boom, boom. 60 contracts, good for $122,000 in about 40 minutes, 30 minutes. Okay, there's unprecedented moves that happen in an environment like this. And if you've got setups that you trust and you understand the risk involved, they can get pretty fun pretty quickly. This is a stock, Shopify, when it was way down at $500. Beautiful squeeze set up here. Beautiful squeeze set up here. Remember what I said. There's your anticipation of demand. Here's where you get in. There's the demand, and then you sell it. Okay, that's what we're looking for. Same thing here on Google. Google. This is saying, guess what? It's anticipating demand. Great. Let's load up. Boom and boom. Okay, so that's what we're looking for here. So first of all, I want to make sure we're all on the same page. I recognize a lot of you guys. I think a lot of you know what the squeeze is, but not everybody does. So see, Mimi's asking, okay, well, what do the black dots mean? So what the dots are is a way to measure volatility. Okay, so when we see, in this case, this is the old squeeze, red dots and red dots. So what this means is that this is a compression of volatility. Okay. Another way to read that is anticipated demand, because what happens is when you get a compression of volatility, it needs to release that volatility. Okay. It's like if you have a puppy and you hold it in your hands, after a while, it's going to start squirming and it may even bite you to get away. It's the same thing here. This is so quiet. It's such a compression in volatility that it has no choice but to explode and release that buildup energy. The red dots are saying, hey, yo, this thing is compressing and it's about to release energy, heads up, okay? Anticipated demand. So, and that's what's happening here too. So when I saw this, I was thinking like, okay, that's awesome, but why did it miss this move, and why did it miss this move? And so that's when we started going like, well, let's play around with the settings because maybe there's some things here we don't understand. And so we went through and we back tested like 20 different settings, and we found one that gives us twice as many signals, and they've got the same win ratio and the same essentially result in terms of it being a big move. So you'll see here at the top, here's the regular squeeze, which is the red dots, and at the bottom is black dots. The black dots is simply a different, kind of an improved setting of the squeeze. So not only do you get black dots when there's a red dot, okay, so you got black dots and a red dot, but you oftentimes will get black dots well before the red dot, so it gives you a heads up. And in addition to that, you actually can get black dots by themselves that don't show the red dots. So again, just that may be a little complicated, but just think of it as both the red dots and the black dots are signals that anticipate demand. Okay, so here you can see we've got a little one here. This one was a pretty sweet move, and then of course this one was a pretty sweet move. So that's what's going on there. And then we did find one more that was, it didn't happen very much, but when it did happen, typically anticipated really big moves. So essentially the Squeeze Pro is taking all three of these settings and then combining them into one easy to read indicator. So if you look at the bottom of the screen here, you'll see that instead of having to look at all three of these, you can go, oh, great. Here's the red one. Now here's the red one here. Here's the black one. Here's the black one here. So they just kind of combine it so you can see it all in the one. So that's what the Squeeze Pro is. So the Squeeze Pro is super powerful, but it's even better when you can line it up with multiple time frames. So if I'm doing short-term trades, I like to look at it like this. And for those of you that did the Squeeze Pro class with me, this was kind of our thing. This is what we looked at. So we would sit there and say, all right, here's Tesla. And I'm looking for opportunities in Tesla. Maybe I'll hold it overnight, but I'm looking for the quick trade. I'm not looking for the scalp. I'm not looking to, get in and out for 50 cents. But, so I'll look at a daily chart and a 30-minute chart and a 5-minute chart, and then I can look for a convergence of signals. So right here, it's like, wow, there's a beautiful 30-minute squeeze. There's nothing going on the daily chart, and there's a little bit one on the 5-minute chart. Awesome. That's good for a little bit of a pop to the upside. All right, so that's awesome. So the most powerful trades happen when there are squeezes on multiple time frames. Okay, so this is one thing I did find out early on, is that when you have squeezes on multiple time frames at the same time, you're going to get bigger moves because you're going to have the power of multiple time frames behind it. Okay, so the really big trades that seem to happen out of the blue, I want you to think Amazon. Okay, that 611K trade was because I happened to be looking at it and noticed that there was like 7 time frames and squeezes all at once. I was like, oh my gosh. And after the fact, hardly anybody sees it coming. And in hindsight, it's obvious. But obviously, if we're going to be successful at this, we got to anticipate the demand, right? Not see it after the fact. Anybody can look at it after the fact and say, oh, you should have bought it there. It's like, yeah, really, thanks. But in the moment, with everything else going on, it's just noise. So it begs the question, what do the best trades look like before they actually happen? Anyone can look at something in hindsight and say, boy, that was great. But what do the best trades look like before they happen? Okay, we're not interested in hindsight trading. That doesn't pay the mortgage. I don't know if you've ever tried to pay a mortgage with a demo account, but that doesn't necessarily work. For those of you that don't know, a demo account is a fake money account. You could make millions of dollars in a demo account, and if you decided to send that statement to the bank and say, yeah, could you just go ahead and take my mortgage payment out of this, they'd just like, ha, 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 you are so funny, because it's fake money. So the idea with this is that we want to be able to find an easy way to look at multiple time frames. Oh yeah, squeeze for shorting as well. We'll look at some short examples too, for sure. So I'm going to show you 2 of my favorite longs and 2 of my favorite shorts here coming up that are setting up right now. Okay. So here's the first thing. At first, I started watching as many time frames as I could. And after about 38 minutes of that, I got a headache. And I bet you when I show you this next chart, you will get a headache too. So here's what I was looking at. So this was Tesla on 18 time frames. So I wanted to see if there was a squeeze on the monthly chart, the weekly chart, the 4-day chart, the 3-day chart, the 2-day chart, the 1-day chart, 4-hour, 2-hour, 1 hour, 30-minute, 20-minute, 15, on and on and on down to the 1 minute. Now, in a perfect world, what happens here is, you get a bunch of squeezes all squeezing at the same time. Oh, wow, there's a 30-minute, there's a 20, there's a 15. You get a powerful move. But literally, after 38 minutes of watching this, I just got a headache. Not to mention the fact that it takes up a lot of resources. So I was excited about the idea of like, wow, 18 time frames. But I was dismayed if that was going to be the rest of my life looking at 18 time frames, because that's tough to do that and stay sober at the same time. So we talked, and I laid out my idea to Eric. He's like, give me a week. And so here's what he did. So he took all 18 time frames. And I don't know if you guys see it yet, but they're right here. So now instead of having to look at 18 time frames, I'm looking at a 1 minute chart, and I can see right away that there is a black squeeze on the monthly chart. There's a black squeeze on the 2-day chart, and then there's some red and black squeezes on these lower time frames. And of course, green just means that there's just a regular old histogram. There's no squeeze. So all of a sudden it's like, wow, that actually makes life a lot easier. So I got really excited because I didn't know if that's something that we could do with the Squeeze Pro. Look at a few things with this. So this was the NASDAQ futures. So here's the NASDAQ futures. You can see that there's a bunch of squeezes setting up right here. And so that allowed me to take short the NASDAQ. And it was good for, it turned out to be about an $18,000 or $19,000 trade in a short amount of time. Awesome. Okay, I like it. Netflix. Oh my gosh, Netflix is such a fun one to trade. I really like Netflix right now here too, though I want to get through monthly expiration. But on this one, you could see that there were, here's all the squeezes, right? So there's no squeezes in here. And you got a little 1 minute squeeze, and that's cute. But look at this, a monthly, a weekly, a 4-day, a 3-day, and a 2-day squeeze. Oh my gosh, that's a huge amount setting up. So I set up a trade on this one, and it turned into a $200,000 day there. So again, you can wait for months for that to happen. You don't need to trade every day. Just wait for that to line up. So what about the big Amazon trade? So on Amazon, what I was looking at here was like, oh my gosh, here's this huge move. There's a daily squeeze. There's a 4-hour squeeze. There's a 2-hour squeeze, on and on and on and on. And now it's like, wow, how much easier is it to see it like this? Way easier. And now guess what? I can just sit there and have a couple of these charts up, and instead of looking at thousands of charts, just wait for Amazon to set up. Okay. Just wait for Netflix to set up. It's all laid out there right in front of you. So that was the Amazon trade. So how do you read all this? So first of all, if you're looking at this, it's like, how do you read this? How does it make sense? Why does it matter? So if you look at this here, what does this mean? So if you see orange, what that means is that there's all 3 squeezes there. And orange overlays onto the red, which overlays onto the black. Now, again, it's not a huge deal. It's just that orange is the most powerful. Red is the second most powerful, and then black is the third most powerful. Okay, I take all of them, but I like to know when there's multiple ones setting up. And of course, green is just that there's no squeeze at that moment in time. So if there's red, so now you can see that the 2-minute chart is red. That means that is a red squeeze. Okay, and a red means that there's black and red. And then you got a 10-minute black, a 15-minute black, a 4-hour black, and a monthly red. And of course, since it's red, that means that it consists of both a red and a black squeeze. So I got super excited by this because I don't know about you guys, that's super easy to look at. You can look at it at a glance and go, wow, there's squeezes on those time frames. And it takes a second. And that's kind of my rule of thumb is if I got to look at a chart for more than a second, it doesn't work for me. Like I need that ooh, ah moment within a second, because anyone can force a trade. As if you're looking at a trade, you can look at a trade for 10 minutes, you'll find something to do. It doesn't mean it's a good idea. And that's what I want to see. So that's what I'm looking for in that type of a situation. So what's missing? So I like this. Oh, did the sound go out real quick? Okay, so let me repeat this real quick. What was the last thing you guys heard? Generally, how many times for okay, so let me go through this real quick then. So if you see orange, okay, that just means that all 3 squeezes are setting up. So it means that there's orange, red, and black. If you see red, that means that there's a red and a black squeeze. And then if you see black, it's just a black squeeze. And again, when I say just a black squeeze, that doesn't, they're all, this is basically the first most powerful, the second most powerful, and the third most powerful. But that's kind of a demeaning way to say it, because the black dot squeezes have just as good a move as the red dot squeezes, and they often have just as good a move as the orange dot squeezes. What I've noticed, it's basically that the orange dot is the tightest compression, the red is the second most tight compression, and the black is the third most tight compression in terms of measuring volatility. Okay, so does that make sense? So if you see an orange dot, it just means that, cool, there's an orange squeeze, but that also means there's a black and a red squeeze. If you see a red dot, that just means that there's a black and a red squeeze, and yada, yada, yada. So, and again, it just, if I have to look at something for more than a second, I need to look at it for 1 second and go, ooh, then it's a trade. Because if I'm looking at it I can look at it for 10 minutes and I can find something to do, but that doesn't mean it's a good idea. I need that 1 second, ooh, ah moment. And this gives it to me, because in 1 second I can look at that and say, oh, wow, look at, there's, blah, 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 there's these squeezes. So, okay, so Kids Advocate has a great question. In fact, let me grab it real quick. So Kids Advocate just asked, all right, so how do you know, oh, that's great, I just crossed it out. How do you know if the squeeze is going to fire long or short? And it's an amazingly well-timed question, because that's what I asked myself. If I'm looking at 18 squeezes all at once, how do I know if the squeeze is setting up to fire long or short? Okay, I like the fact that I have squeezes. Don't get me wrong. I don't want to be ungrateful for all of Eric's work. But at the same time, I don't know if they're going to set up to fire long or short. So it's like, this is an amazing tool, and I only have half the puzzle. I only have half the puzzle. So in terms of understanding if it's going to fire long or short, I know this is an eyesore, and I'll get off of this, but I look at the histogram. So here's a monthly squeeze on IWM, and the histogram is red. That's bearish. Okay. Here's a 4-day squeeze right there with the light blue histogram. That's bullish. Yada, yada, yada. So how the momentum on the histogram works to guide our decisions is very clean and very simple. Light blue simply means that momentum is above zero and rising. That's bullish. Dark blue, that means that momentum is above zero and falling. That's bearish. Okay. Yellow means that momentum is below zero and rising. That's bullish. And red means that momentum is below zero and falling. That's bearish. Okay. So that's what we have. That's what I use. That's the information that I use to let me know that the squeeze that's setting up, okay, if it's a squeeze and it's got light blue, that's anticipated buying demand. If it's a squeeze and it's red, that's anticipated selling demand, right? So that's what I want to look at. So my thought here was, what if we could see all the histogram colors at a glance? Like, oh my God. And I actually got a little sad about this, because I was so excited about the idea, but I didn't want to upset Eric. I mean, he's a naval aviator and he knows where I live. And B, what if Eric looked at this and said, John, that's impossible. And again, I would have shed a little bit of tear. So we talked. I blinked it out because I think there was some cursing. And he's like, oh my God, John, I think that's impossible. But let me look at it. So he got the old pencil out and sharpened it. And so here's what he did. So again, I want you to look at this chart. Look at this chart. And you're going to see that here's IWM. You got a monthly chart, you got the 2-day chart, you got the daily chart, et cetera, et cetera. What if you could see all the histograms for all of the squeezes as well? And this is what Eric showed me. So now, all of a sudden, as I'm looking at this, on the top, there's the squeezes. Okay, if you guys remember, there's a black dot squeeze. There's a black dot squeeze. There's a black dot squeeze, red dot squeeze, red dot squeeze, and red dot squeeze. If you look at the bottom, that's the color of the histogram, okay? So on the monthly chart that has a black dot squeeze, the histogram is red, okay? What does red mean? Red means that it's below zero and falling, right? Does that make sense? The daily chart is dark blue, okay? That means it's above zero and falling, on and on and on. And so now what I can see here at a glance is 18 time frames, and whether or not there's a squeeze, and then 18 time frames, what the histogram color is on that time frame. I was like, oh my gosh, that's just such a game changer. So if we go back here and we look at Amazon, okay, all of a sudden, no wonder I wanted to buy this thing. If we're looking at the monthly chart, that's bullish. That's bullish on the weekly. That's bullish on the 4-day. That's bullish on the 3-day. That's bullish on the 2-day. Okay. Yeah, there's a little bit of a pause here, but guess what? If these are all bullish and the 2-hour turns red, you look for, as soon as that 2-hour turns yellow and that turns bullish, and if you got a squeeze there, it's a huge buying opportunity. Okay. And this is so much easier than looking at this. It's like over here, this is clean. This is easy. I can see this. I can make sense of it. Whereas this gives me a headache, okay, and makes me want to yell at my dogs. So it's just way, way, way easier. Yeah, so good question. Woodstocks, for the 18 time frames, do we know which squeeze is the most dominant and will determine the direction of the move? So it's a good question. So the way the squeezes work is that each squeeze is good for 8 to 10 bars on that time frame. So a monthly chart means that's the signal is good for 8 to 10 months. The weekly chart, 8 to 10 weeks. The daily chart, 8 to 10 days, right? The hourly chart, 8 to 10 hours. So it's very possible that you could have, say, a bearish monthly squeeze setting up that's going to lead to trending lower prices over the next 8 to 10 months, but you could get a 6-hour pop within that cycle. So while each time frame acts on its own, the lower time frames are all influenced by the higher time frames, not the other way around. Okay. So a really powerful move is when you have higher time frames. In this case, the histograms are light blue. And then if you got a 15-minute squeeze with a light blue histogram, and that light blue histogram is in alignment with the 2-day, 3-day, 4-day, weekly, and monthly, oh my gosh, you're talking like, Pop City there. So that's the kind of stuff that gets me excited because it just makes this a lot easier. I can increase my risk if I want to. I can, just because I got everything in alignment. And when you have things in alignment like this, there's not this dichotomy in all these different time frames, it gets a lot easier. And if you've got a chart that has alignment that's all over the place, you can skip it because you'll see at a glance that it's sending you a mixed message. Okay. So prior to all this, we could only see the old squeeze on multiple time frames. Now we can see the squeeze pro on multiple time frames, but also we can see the histogram color of each squeeze on each time frame. Okay, before we had no idea. Like I've been doing this for 30 years and I've never been able to do this at a glance like that. So it's not only is it super powerful, but we've got some of the most volatile markets in history to take advantage. And we've got 5 million new trading accounts that have entered the market. That is fresh meat. So this is an unprecedented opportunity to just be on the right side of the trade, whether it's bullish or bearish, but you can read it, which is fantastic. So, again, for Netflix, how do you read this stuff? Netflix, you've got a monthly, weekly, 4-day, 3-day, and a 2-day chart that's got bullish momentum. The 4-hour one here turned yellow. Remember, yellow, oftentimes in a situation like this, yellow, which is rising below zero, is a slingshot that's going to, and you can see right here, see the slingshot? I love when I see that. So it's a 4-hour chart. You can see when the slingshot turns here in the same direction as bullish as all these larger time frames, you often get the best moves, okay? And that's not a trade I talk about very much, but these slingshot trades are very powerful when you get a lower time frame that slingshots in the direction of multiple higher time frames. It's a huge, huge, huge advantage. On the other hand, IWM. Now, I did a webinar on this last Wednesday, so this is great. So here's IWM last Wednesday. Here it is as of about 48 minutes ago. look how much it's changed. You can see the deterioration. Now, the monthly chart hasn't changed. We got a squeeze, we got a red histogram, okay? And the weekly, 4-day, 3 days haven't changed. They're the same. But the 2-day has gone from light blue to dark blue. It's rolling over and dying, okay? The 4-hour went from dark blue to below zero. It's dying. The 2-hour is still red. The 60-minute went from yellow to red. So you can kind of see the deterioration setting up here. So IWM is one of my favorite shorts. And you can see here, it's just cracked. So this is one that I think, we may get some rallies into expiration. But my plan this week is to add shorts on IWM, more shorts on the transportation sector, and a couple of other stocks I'll show you here as well. Okay, so my favorite stock to short right now, besides IWM and besides IYT, is Booking.com. Now, this nasty stock is very thin, but here's the weekly chart. Now, if you remember, and here's the daily chart. The stock market basically has rallied back to its 618 levels. The NASDAQ has rallied back to its 786 levels. Look at this dog turd, and it's already breaking down. At this point, I'm just praying for a rally into Friday. If we could pin at 1400 and rally into Friday, I'm going to short it on Friday. I'm expecting this stock to take out this low and go to $1,000 as a first target. Okay, why? Gosh, monthly squeeze with a red histogram, and it hasn't even fired yet. Remember, when this fires short, that's 8 to 10 months of lower prices. Okay, this is something where I can buy a far out of the money put debit spread and forget about it and see what happens. So that's one of my favorite shorts right now. It ain't the most liquid stock out there, but my gosh, fundamentally and technically, it is one of my favorite ones. Bigger picture. So these are some headlines from today. In fact, from tonight's Asia session. China is sealing off cities in a province that borders North Korea amid a growing cluster of cases. The US dollar reigns supreme while the world is gripped by crisis. Now, if you guys remember in 2008, China was leading the world in calling for a new global currency. They are not calling for that this time around. They and everybody else wants dollars. For all the human and economic damage it has wreaked on the U.S., the coronavirus crisis has reinforced the most important vestige of American power in the global economy, and that's the supremacy of the dollar. The U.S. moved decisively to help foreigners get dollars while the market started seizing up. Why do I bring this up? The fundamental story of the dollar is strong. Look at the technicals. Monthly squeeze, and now this is dark green, dark blue, but that means what? It's momentum above zero. All these are light blue. Okay, what I'm looking for is that monthly actually then turns to, it'll most likely be light blue in June. Okay, you got a weekly squeeze, you got a 4-day squeeze, you got a 3-day squeeze, you got a 2-day squeeze, you got a daily squeeze. I'm looking for the dollar to go to 115. So it's one of my favorite long trades on the planet right now. I think it's the easiest long trade out there. The Fed will try to kind of keep it moderated, but these are market forces that are being unleashed right now, and there's basically a short squeeze on the US dollar. The other thing I like about this is that it is really, really fantastic for quick hits. In the past, I've not been a huge fan of quick hits. It's like, why do I want to try to make 5 to 8 points in the stock when I could sit back and try to catch bigger moves? This is a trade that I did last week. I'm watching Tesla. First of all, I'm taking stock. Monthly, weekly, 3-day, 2-day, not a surprise, very bullish. I see a 1-minute squeeze setting up and So I'm watching a 1-minute squeeze, a 1-minute squeeze, a 2-minute squeeze, a 3-minute squeeze, which I'm not that interested in, frankly, by themselves. But I am interested when I see those, and then you see like a 10 and a 15-minute squeeze. Why? Because these are the fuses that light the firecracker. When the 1-minute and the 2-minute fire, okay, that then is the fuse that can cause the 10-minute to fire. So if you notice then the next slide here, you've got the 20-minute squeeze added. Okay, so I started buying calls with the anticipation that the 1 minute squeeze would fire and light these fuses. Boom, the 1 minute squeeze fires. Right now, Tesla's at 778. You can see it rallies about 9 points. Notice here, all these squeezes are gone. So the 1 minute fired, then the 2 minute fired, then the 3 minute fired, then the 10 minute fired. Okay. That's what I'm talking about there. It's a chain reaction. Boom, boom, boom. Get in, get out. So on this one, it was a quick trade, good for $59,000. Get the hell out of there. I'm not taking overnight risk on this trade. Okay. So I love that kind of stuff. And to me, this is the kind of market, because we have this kind of volatility, you can be patient and wait for this. You don't have to have 20 different trades on. You can have a lot of cash on. You can sleep well at night and find these opportunities. Okay, so the Squeeze Pro by itself is awesome. Think of it as a 911, but the multi-squeeze and multi-histogram is the Porsche 911 Turbo. All right, it gives you that little extra kick that blows everything else away, which I really like. So you have trouble finding trades, so let's make them easy to find. The other thing here, part of the class I want to do is we updated the scanner to include the Squeeze Pro. Okay. Now, although it won't find the multiple time frames for you, it will form a basis. And I'm going to go through and show you exactly how I use this and how I pare it down to find the watch list, so I can narrow it down to the 2 or 3 that I want to trade that particular day. Now, without this stuff, here's what happens, and I guarantee you that this is happening a lot yesterday and today with the 5 million new accounts that are out there trading. They see something going up, they buy it, they get thrilled, they start making money, they experience euphoria. Oh boy, they start making spreadsheets on how much money they're going to make every day for the rest of their lives and how they never have to work again. The market starts to come back, a little bit of anxiety, not much. And then it goes through their entry. Now it's just denial. Okay, as soon as it comes back to that old target, I'll get out. And then fear. Okay, as soon as it comes back to my entry point, I'll get out. And then depression. Oh my God. Panic, capitulation, depression. Okay, this is the highest potential for earnings. And what this represents is the 21 EMA and a squeeze. Okay, if I could tell you anything here that's going to change your trading, is never, never, never enter a trade unless it's at the 21 EMA with a squeeze. It doesn't matter if it's a bullish or bearish trade. Bearish is just the opposite of this, right? Are there times when I will look at something because there's so many squeezes lining up and I'm just like, God, this thing is going to fire? I'm willing to buy it now and I'm willing to hold through this pullback if it happens? Yes, but I look at that in advance and I use any pullbacks to add to it. The other thing here is you want to keep in mind is that the human body dials in your emotions and feelings that you've experienced over the last 2 trades. And that'll become if you're not careful, that will drive your decision on the 3rd trade. So what does this mean? If you're as a 5-year-old kid, this is an example from Mark Douglas's great book, not Mastering the Trade. Who am I? Where am I? A Disciplined Trader. If you're 5 years old and your first experience with a dog is a nice, friendly Labrador, for the rest of your life, the moment you see a dog, and before you even realize what happens, your nervous system will release warm feelings and you'll feel safe and happy. Okay, and it's unconscious. You don't even know what's happening. However, if your first experience with a dog was it bit your arm, for the rest of your life, unless you go through therapy and learn how to let go of that, identify it and let go of it, every time you see a dog, before you even understand what's going on, your nervous system will release fear into your system. Okay, this is what I called it. It's like a moist robot. You can't control it. That it gets embedded. Traders are the same way. If your last 2 trades were great, this euphoria embeds your system and you take that euphoria with you onto your next trade. It's super dangerous because all of a sudden you think you're unstoppable, you're invincible. Nothing can happen to me. Along the same lines, if your last 2 trades kicked you in the teeth and you approach the next trade with fear, okay, it's also going to mess you up. That's why you want to have a specific trading plan that's non-emotional based. It's non-judgment based, okay? You want to make it so easy that your 10-year-old could do it. So the squeeze is something I've been using almost all my trading life. It's the most versatile tool I've ever come across. I use it on stocks, options, futures. You can use it on Forex, the pairs, the crosses, and all that kind of stuff. And what's nice about this is based on your lifestyle, you can choose your time frame. You want to position trade, do the monthly and weekly charts. Okay, don't worry about the smaller time frames. You want to swing trade, great. Daily charts in like 2 hour. You want to day trade, great. 30-minute and 15-minute. It's 8 to 10 bars. So you pick your poison. So it pinpoints those moments in time when you can look forward to a greater than expected move. So, which I think is pretty fantastic. So for me, this is a game changer. Not only is it a game changer for me, and this is something I've been doing a long time, I feel it is a obligation for anybody out there that's brand new to understand how the markets work. And these are tools that automatically take into account all the psychology that's out there, how the markets normally move, okay, and basically gives you an edge once you learn how to do it and once you start following the program. So the biggest barrier to enjoying solid gains with options is simply timing, and this helps you nail the timing. When you get the time and the direction right, you can do beautiful things with leverage. Okay, this year I've been focusing on trading 2 accounts. The big account in the room, this is one I've been trying to grow and use for income. It's been up a couple of multiples here, and it's been great. I'm trying to now narrow it down and continue doing it for income. Also trading, and this is one where my goal is to wire out money every week, 2.5% a week. Boom, boom, boom. And then a smaller account, I'm going to start getting more aggressive with, simply because with these tools, I have a little bit more confidence that we could take bigger position size and maximize it. All right. So I'll be doing that in the small account alerts. So long story short, these new tools are a game changer. They turn a great tool, okay, the Squeeze Pro, into a lethal timing device across multiple time frames. So all a trader has to do now is just learn how to use the tools and when to wait for when they line up, okay? Because at the end of the day, trading is, when it boils down to it, it's pretty easy. Your only goal as a trader is to create an equity curve that goes from the lower left of your screen to the upper right. That's it. And when you think about that, it's going to make the rest of your trading life so much easier. You don't need to understand why something is happening. You don't need to read the news, okay? Your job's to take small losses. You should feel good about that. There's no shame. You don't need to resurface any childhood shame every time you take a loss. Oh my God, my dad doesn't love me. No. It's your job is to take a small loss. And when you reframe your trading like this, that this is your only job, it allows you to develop the habits of a good trader. Cut your losses short. Bam. If you had a car wash with 10 employees and 2 were sitting in the corner smoking weed all day and they weren't working, would you give them a raise or would you fire them? Okay. Most people would fire them. But if those were trades in your account and they were 2 crappy trades and they were taking your money, a lot of people keep adding to it and they keep hanging on to it. Oh, please stop smoking weed and come back. Right. And it's totally illogical, but that's just how, that's how we're wired. So keep it easy. Now, at the end of the day, I do like the occasional big trade. It's fun when they happen. They don't happen all the time. But really, these days, I mean, look, hey, especially now, I'm at home. I want to hang out with my kids. I want to hang out with my wife. So what I like is consistency that is simple enough to do on my cell phone. Okay. Wow. Big account, small account, easy peasy. So if you guys like all this stuff, I'm going to do a deep dive into this on Saturday. All right. Today's Wednesday. So that's pretty soon. And we're going to have an opportunity to live trade together as well. As a bonus with these tools, these are new tools. These are separate from the Squeeze Pro. By the way, you would need to have the Squeeze Pro to do this. If you've got the Squeeze Pro right now and you're happy with the Squeeze Pro, great. If you are interested in adding these new tools to your repertoire, I do think that this is one of the ultimate game changers I've ever seen, and I'm super excited to kind of unleash this. So how this works, and this is the link down here. Does this work for buying stocks? Oh yeah. So this is totally designed for the underlying. So when we're trading options based on the direction of the underlying stock. I'm a huge fan of just trading the stock itself for a lot of reasons. So the link here, and you got to type it in, is simplertrading.com/hidden. The basic course includes a strategy class where we're going to go through how to set up the tools, but most importantly, the checklist to develop how to trade this. When do you get in? When do you get out? How do you scan for it? When you get the scans, how do you narrow down which ones that you want to do? Okay, so you've got your game plan for the next day. It also includes the Multi-Squeeze Pro tool. We'll have an indicator setup session with Eric and a 30-day free trial to our scanner. I found that the scanner is superior to trying to search these in Thinkorswim and in other platforms. It'll save you a lot of time and it'll identify opportunities for you. The pro version of the class, of course, includes all of this plus the multi-histogram indicator and the live trading. I'm a huge fan of the live trading. So why is that? When I first started learning to trade, I would go to these 3-day live seminars. This is before there was this thing called a webinar. And they would show me all these great examples on PowerPoint in hindsight. Well, when push came to shove and I was trading with real money in a live market, what they were telling me didn't necessarily sink in. Everything looks perfect in hindsight. Everything looks perfect on a PowerPoint. Where you really learn how to do this is live. So the best example I can give is golf. So if you've never played golf before and your boss comes up to you and says, hey, Charlie can't make it. Our clients are coming in. We need you to play in the charity golf tournament. Can you be there Monday? And of course, if you're, I guess it depends, but if you say, of course, I'll be there, and then you spend the weekend reading about golf, okay, how do you think you're going to do when you get out there? You've had no practical experience. So yeah, you might be book smart about it, but when you rear back that first club and you hit and you go to hit, you're probably going to slice that thing right into your boss's forehead. So the idea with this is that you've got to have that practical experience. You need to be swinging the club with the golf pro sitting there going like, no, man, you're holding the club too tight. You need to drive your shoulder back, da-da-da-da. And that's the whole idea of the live trading is that you can watch me trade. You can take the trades if you want to, and you can obviously ask questions like, well, what about this? What about this? What about this? And so I think that's powerful. And then the elite version of this class, of course, is just all of this plus an additional 2 days of live trading. And the goal of the live trading is that, and this happens way more often than it doesn't, is that we make enough money live trading to actually pay for the class. So that's the idea with it there. If you don't have the Squeeze Pro, I know most of you have the Squeeze Pro, some you don't. If you don't have the Squeeze Pro, you will want to buy it. So you'll see a link for that at thesimplertrading.com/hidden. The Squeeze Pro is the tool that's down here. So if you've already got that, that's fantastic. If you don't have it, you'll definitely want to add it. One thing here, and I'm just showing this, a couple of people ask, well, why do you show this? Well, this is the first time in, 5 years where I am just focusing on trading, okay? I've got Brittany running the show. She's a way more competent at running a business than I am. So that leaves me time to actually focus on trading. And then Julia's helping me scanning and finding setups and answering questions and stuff like that too. So I'm locked and loaded. If there's any year to be fully locked and loaded and dialed into trading, this is it. So I'm super excited, not only this year with that, but it just helps with so much. For those of you that don't know, we do have the PayPal credit program. What this means is that you can get this for $0 down and no payments for 6 months. And after that, you can they start charging interest. Frankly, I don't know what the amount is, but the goal with this is that if you're just kind of like, well, I like this idea, but you can do this, and it gives you some time. And then after that, you can just make payments. So again, I know not it's different for everybody, but I think that's just a cool option to have just in case. And it's 0% interest for the first 6 months. These indicators are on Thinkorswim. These are hard indicators to develop for other platforms. I know not everybody uses Thinkorswim. My recommendation on these is that you don't need to change brokers. If you've got Robinhood or you got Schwab, that's great. You can download Thinkorswim for free with this link, simplertrading.com/toss. You get discounted commissions. Throw like $100 in it. There's no fees. They don't charge you for data. They won't charge you any annual fees. Then you can chart on TOS and then execute on Schwab, execute on Robinhood, execute wherever you want. And I know some countries don't have Thinkorswim available. So just if you're in that situation, let us know. We've got some recommendations on that for the scanner and stuff like that as well. Okay, so I think, yeah, that makes sense. So for the live trading, It's going to be on the first set of live trading is going to be on May 19th and May 21st, and it's during market hours. And then the next set of live trading will be on. Oh, and by the way, if you can't be there during the live trading, you'll get alerts. So you get push notifications to your phone, and then you can go back and watch the recording later, which I think is just really cool. Okay. Whew. All right. So that's everything. I'm happy to answer questions for a few minutes, but just wanted to show you guys that. I think it's going to be pretty amazing and a lot of fun. And go from there. Oh yeah, let me, okay, I'll bring up the page here so we can look at that together. simplertrading.com/hidden. Okay, so if you look at the page, if you'll scroll down here, so here's, if you don't have the Squeeze Pro, you can add it here. And then if you already have the Squeeze Pro, these tools are new tools. So that was a question that came up. It's like, oh, I already have the Squeeze Pro. That's awesome. These are new tools that complement the Squeeze Pro. And so there's the basic package. You can scroll down there. You know, again, gives you all the highlights there. The indicator setup. So the indicator setup will start at 10:30. All right. And okay, so there's all that. So here, I'll do a quick recap for you and then answer questions. So on the basic package here, let's see, this will be on May 16th. Eric will start at 10:30, and then all times are central. So 10:30 a.m. And then I'm going to start at noon. And then for the live trading, if you're going to do that, there is 5:19 and then 5:21. Okay, and it's just during market hours. And then if you're doing the elite, they'll be trading on 5:27 and 5:28, which is a Wednesday and a Thursday. And again, during market hours. And if there's anything that you can't attend live, we will, of course, record everything. And the recordings are done fairly quickly. And then for the live trading, there will be push notifications. So if for some reason you can't attend the live trading, you'll still get the exact trade alerts that we're doing. Crash. Oh, for sure. Yeah. If you want to start off with Pro, see how you like it, and then potentially upgrade later, certainly something you can do. How much is the scanner after the 30-day trial? Good question. I believe the scanner is $79 a month. And on the free trial here, there's no auto renewal or anything like that. It's just we want you to try it for 30 days. If you like it, awesome. Then you can manually subscribe to it. And if you don't, that's fine. But I will be using it in the class. That's how we're going to find all of our trades. And if you're buying the Multi-Squeeze Pro from your website, can you still use PayPal financing? I believe so. I'm not 100% on that, but I'm about 80% sure you can. Is the scanner only used for squeeze alerts? No, you know, the scanner, we've got a couple other cool things in there. We actually have a specific setup that we like for high short interest stocks. So there's a scan for that. So there's actually a couple, and there's also some intraday scans. It's actually, we built it simply because we couldn't do it on any platform. Yeah, so Vance, good question. So if you're going to be, like I say, a day trader, do you just ignore the monthly chart? Basically, yes. I mean, the monthly chart, if you're planning on being in and out of something in 2 hours, the monthly chart isn't really that going to be that helpful for you. Now, for Amazon, that monthly histogram is light blue, which is bullish. So you know what? Probably most of the time, I'm going to focus on the long side of Amazon. But is that monthly chart the deciding factor? No. Dun, dun, dun. What is the cost for both the Pro and Elite days? Oh, so sorry if this wasn't clear. So the price is up here. So the $697 includes all of this. The $1197 includes that, plus this, and then the $1497 is everything. So the 4 days of live trading, all the indicators of the class. So everything there. Okay, okay, Jay, awesome. No, have a good night. Beast on them, brand new to the game. Yeah, no, brand new to the game. There's going to be a lot. It can be overwhelming at first. I do like the idea, though, is my goal is, we kind of go everything on the Saturday class. We go through everything in detail, but then the goal is I come out of it with a one-page checklist. So just try to keep it pretty simple. Rafa, that's awesome. Yeah, no, look, I mean, it's funny because we love trading and we spend a lot of time with you guys in the rooms and stuff. So it is kind of like, it's kind of like a trading family. Yeah, so during the Saturday class, we are going to spend some time going over the Squeeze Pro tool as well, just to make sure everybody's on the same page. So if you've never used the Squeeze Pro before, we will spend some time so that at least you're up to speed on it. What time do we finish on Saturday? So my goal is to be done by 4 p.m. I find after about 4 hours, everybody's brains are full at that point. Did you say that you have to buy the Squeeze Pro tool separately? Okay, so it's included. So the Squeeze Pro, sorry. If you don't have this, so probably 90% of the people in here already have the Squeeze Pro. We just did a relaunch on it, I think last month. So if you're looking at this, you're like going, wow, the Squeeze Pro, what's that? It is, you don't like 100% have to, but I would highly recommend it. You can try it without it. It's just that you won't, it is useful. But you can certainly try it without it and just see how it works. And you might like, oh yeah, I need to get it. Because you'll still be able to see at the top of the screen what's going on. Andrew, very nice. We're brand new, just going through foundations class, one of 5 million new accounts. Well, our goal, Andrew, is that you don't, you become one of the 10% that understands this quickly and can start getting consistent at it. So welcome aboard. What is the difference between the Squeeze Pro and the Multi-Squeeze Pro? So the Squeeze Pro is what you see at the bottom of the screen that shows you the histogram on that time frame, and then the Multi is that snapshot along the top that allows you to see if there's a squeeze on one of 18 time frames. Can you use this just to trade 1 to 2 stocks? So some of the most successful traders I know look at basically like the S&P 500 and Amazon. They just look at 2 things and they just wait for setups in those 2 things. So yeah, and that's actually a very easy way to do it. John, I have just finished reading your book and did the small lot. Is it too soon to go on to another class? So that's a good question. So I am sensitive to the idea of information overload. If you're comfortable with what you're doing and you've got the Squeeze or you have the Squeeze Pro and you're comfortable with it, I'm always a big fan of go ahead and spend some time digesting that. If what you looked at tonight here resonates with you, it's like, oh, is that going to take me to the next level? If you felt that, then I do think that there's something to this in terms of it's like, hey, this is the next level and it's going to simplify things. But so is that, I don't know if that answers your question or not, because you're in a good spot as well. So that's a tough one. The Squeeze Pro package includes the Squeeze Pro and the Multi-Squeeze Pro. Okay, so good question. No, so the Pro package includes the Multi-Squeeze Pro and the multi-histogram. So because we just launched the Squeeze Pro last month, where we relaunched it, we assumed that most of the people on this webinar would already have the Squeeze Pro. But in case you didn't have the Squeeze Pro, it's recommended that you do add that, and that is on the page. Can this be used for day trading futures? Yes. So I'm a big fan of the ES and the NQ. And this is great, especially if you get the 1 through 10-minute squeezes lining up. Will the Saturday class be recorded for those of us who have other family commitments? Absolutely yes, Mike. I mean, and you never want to miss a family commitment for a class because the class is recorded and you can always go back to it. Definitely spend the time with your loved ones as much as you can. If I'm a resident in Canada, can I get access to Thinkorswim? So, Robert, I think the answer is yes. If anybody from Canada can confirm that, yes. Okay, the answer is yes. What is the difference between the pro live trading and the elite live trading? So the only difference is with the elite, you get 2 extra days of live trading. Oh, the Infinity AT charts, BT. I'm not sure. I don't know if it can initially. I know initially we're rolling it out with Thinkorswim, and then we're going to look at other potential platforms that it could adapt to. And I know that AT is usually pretty flexible. Okay. All right, guys. Well, now, and if you do have questions, of course, you can call us, and then you can also email us at support@simplertrading.com. And I do see a lot of questions, a lot of one-off questions. So, what if I already have the scanner, or and I mean, if you already have the scanner, congratulations. And those tools just got added to it. So basically, part of the Saturday class is I'm going to be showing you how I use the scanner to maximize the possibilities there. And of course, this will be on Saturday. So we've got 2 more full days before we start the class. So if you guys have questions and stuff like that, I'm personally super excited about this class. And yeah, just, I'll be in the room tomorrow. So if you're in the room, I'll show you some of the stuff that I'm looking at, obviously real time. And we'll do that. Okay. And when am I planning on doing this again? I usually, when I do a class, it's the intention of, if I do it again, maybe next year. I mean, and that's why we record it. I mean, I would rather, frankly, just be trading. Doing a class is a lot of work. My wife always gets nervous when I'm doing a class because I get kind of hyper focused and I forget to communicate. So it's like, okay, is he mad at me? I'm like, no, I'm doing a class. So I don't like to do a lot of classes. So, I'm going to give this my all, give you the best that I got, and then go back to trading and relaxing. No, awesome, MCC. No, it's going to be great. I'm super excited about this. And what I like about this too is I'm very, very passionate about sticking it to the algorithms. They're out there taking everybody's money and doing a good job at it. And the more we can kind of play on their side and sometimes take money from them as well, the better. So I know all the frustrations that trading can create, but I know all the benefits that it can offer. And it's just blending those two together. How do you do this in a way where it's not very frustrating and it's consistent? Okay. And if the people that have the toughest time with trading are typically the smartest, the doctors and lawyers and pilots and it's engineers, because they come in and in their past, the way they've been successful is through learning. Okay, so if I read more books, I'm going to get better and I'll be, I could be the best in my field. And it's not the same in trading. Trading is, yeah, you got to learn the basics and you got to learn how the market works. But after that, more book smarts does not equal better profits. You've got to understand how your mind acts when it's on a trade. Okay, this is your mind. This is your mind on drugs. This is your mind. This is your mind when you're long Amazon. And once you understand that dynamic, and then you can start to cut things loose without a second thought, it becomes a whole different ballgame. You got to have the right tools. You got to have the right mindset. That's awesome, Jay. It's legal. Jay, that's awesome. Yeah, and by the way, and I mentioned those professions because there's a lot of traders in those professions. And that's a common thing I've seen. And once you make that turn and realize, so here's the problem is, so if you're an engineer, it's like, look, I solve problems. So the problem I'm going to solve here is I want to be right 100% of the time. And if I'm going to be right 100% of the time, that means I need to, do this, 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 and this. Well, it's really getting ingrained in the idea that trading is a probabilities game. And yes, you can increase your edge, but at the same time, you never know what's going to happen next. You could be in the perfect trade and a tweet's going to ruin it. Okay. So you got to understand it's a game of probabilities, not certainty. And the only answer to the question of why is this happening is who cares? It doesn't matter. And the only answer to the question is, what do you think it's going to go from here? Is I have no idea. And once you get 100% comfortable with the idea that you have no idea what's going to happen next and that this is a probabilities game, this becomes a lot easier. Matt, that's awesome. I'm an engineer, but I only expect to be right 99% of the time. Now, I've been watching the futures tonight. They're just quiet. We had a little bit of a bounce earlier. We got monthly expiration. I think it's gonna be a weird 2 days. All right, guys. Well, I'll leave this slide up. I want to respect everybody's time. We've been going for an hour and 25 minutes, so I will sign off. Again, you can just type in this link. Here's an email. You can read that ugly handwriting and all the information there. We're here to help you over the next couple of days if you want to sign up for this class. Otherwise, good trading. For those of you in the room, I will see you tomorrow afternoon, and then I'm going to do a Friday open and a Friday close, and then we'll rock and roll into the Saturday class. All right, guys. Have a good one. Have a good night. Sleep well, and I will see you tomorrow.